At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you.
Today, September 19, 2022, NIO stock a buy? China EV startup regains key level as its Model 3 rival looms. NIO targets a booming market for electric cars. The EV startup is seeing deliveries recover as new models roll out, but competition is intense. Is NIO stock a buy as it tries to bottom out? Founded in 2014, NIO, sometimes called the Tesla of China, went on to deliver booming sales. Like Tesla, NIO makes luxury electric vehicles. Unlike Tesla, NIO does not make its own EVs, instead partnering with a state-owned auto manufacturer. NIO, Speng and Li Auto are startup rivals to Tesla in China, the world's fastest-growing EV market. Homegrown EV and battery giant BYD and Volkswagen are also making strides in that market. Latest NIO news. On September 12, NIO stock skyrocketed as a Deutsche Bank analyst maintained that the startup is his top China EV pick. Analyst Edison Yu pointed to 3 new EVs in 2022 and the arrival of refreshed older models over the next year. On September 7, NIO turned in a mixed second quarter earnings report but gave a better than feared forecast, after second quarter deliveries fell versus first quarter. NIO expects a strong recovery in third quarter and record deliveries every month in fourth quarter. The China COVID lockdowns, supply issues and a tired EV lineup had weighed on NIO deliveries. New and upcoming EVs include the full-size ET7 sedan, mid-size ET5 sedan and ES7 SUV. NIO's taking some of those models to Europe as well. Older generation models include the ES6, ES8 and EC6 SUVs. NIO ET5 deliveries are set to begin September 30. The ET5, seen as a Model 3 rival, could become a top-selling premium model given exceedingly positive initial customer reception, Deutsche Bank's Yu says. NIO targets the premium EV market but is reportedly mulling a mass-market EV. The long-rumored, affordable NIO EV could attract a new user base. NIO also plans to make its own battery packs from 2024. NIO stock technical analysis. NIO stock continues to work on a 24.44 buy point from a bottoming base. NIO advanced 3.7% to 20.89 on September 19, rebounding off the 50-day moving average. The once hot EV stock remains more than 50% below its 52-week high after tumbling on various factors, including supply disruptions. NIO stock's relative strength line is improving within a longer downtrend. It rallied sharply for most of 2020. A rising RS line means that a stock is outperforming versus the SANP 500 index. It is the blue line in the chart shown. Shares earn a poor IBD composite rating of 32 out of 99. The rating combines key fundamental and technical metrics in a single score. An RS rating of 27 means that NIO has outperformed just 27% of all stocks in IBD's database over the past year. NIO's accumulation or distribution rating of A reflects heavy buying by big investors over the past 13 weeks. As of June, 883 funds own shares. NIO stock shows 0 quarters of rising fund ownership, according to the IBD stock checkup tool. NIO earnings and fundamental analysis. On key earnings and other fundamental metrics, NIO lags. It's a young and fast-growing company, still looking to turn a profit. NIO stock earns a weak EPS rating of 2 out of 99. The EPS rating compares a company's earnings growth versus other companies. NIO holds an SMR rating of D, on a scale of best A to a worst E. The SMR rating is a combined measure of sales growth, profit margins and return on equity. On September 7, NIO widened net losses for the second quarter to 20 cents per share. Revenue climbed 22%, ahead of views, as EV deliveries rose 14%. The company's guidance for 31,000 to 33,000 EV deliveries in the current quarter was better than feared, given lingering supply disruptions. NIO expects production to ramp up in fourth quarter, with record deliveries every month in the quarter. In all of 2022, analysts polled by FactSet expect NIO to more than double losses to 64 cents per share. Revenue is seen jumping 43% for the year. They forecast NIO will sharply narrow losses to 29 cents in 2023 as revenue grows 81%, amid the launch of new models and expansion in global markets. In 2021, NIO more than doubled EV sales, despite pandemic-related supply challenges. Out of 36 analysts covering NIO stock, 34 rated a buy and 2 have a hold. No one has a sell, FactSet says. China EV competition grows. NIO targets China's market for premium electric SUVs and cars. Tesla rules that market, but Chinese EV startups are emerging as fierce competition. For now, Tesla far outsells the startups like NIO. NIO reportedly plans to roll out a mass-market sub-brand in 2023. Besides Tesla, General Motors, Ford and Volkswagen sell electric EVs made in China for Chinese consumers. Volkswagen is making strides in that country's EV market, outpacing NIO's sales in the first half of 2022. Chinese EV giant BYD is another rival to watch. Even Tesla has begun to lose ground in China to Warren Buffett-backed BYD. By 2030, EVs will make up 90% of new car sales in China, NIO CEO William Li forecasts. While expanding capacity in China, NIO is growing overseas. It sells EVs in Norway and aims to be in 25 countries by 2025. NIO has been shipping ET7 sedans to Europe as part of a wider launch there. BYD and Xpeng are in Norway as well, with BYD also planning a major push in Europe, among other markets, before year-end. Li Auto aims to enter Europe. Chinese EV makers are challenging Western automakers, including Tesla, on the continent. Outlook for NIO, EV stocks. On home turf, China's NIO, Li Auto and Xpeng are expanding to fend off Tesla. Led by China, global EV sales more than doubled in 2021 versus the prior year, according to the International Energy Agency. But NIO and other China EV makers have struggled in 2022, due to COVID lockdowns and restrictions, as well as chip shortages and other supply chain challenges. NIO offers an innovative subscription plan for batteries. Basically, NIO sells the car and the battery separately. Users can buy NIO EVs without batteries for a lower price and rent batteries for a monthly fee. They also can swap car batteries based on their needs. NIO boasts 1,047 battery swap stations in China, which have performed more than 10 million battery swaps. It has taken battery swaps to Norway, further challenging Tesla in that market. Is NIO stock a buy now? From a fundamental perspective, Chinese EV startup NIO continues to lose money while enjoying enviable revenue growth. It's seen as a credible Tesla challenger in years to come, with strong brand power in China, a leading global market for electric vehicles. For NIO, new electric cars and global expansion mean more runway for growth. But the EV wars are heating up, with BYD and Volkswagen speeding up versus Tesla and NIO in China. NIO is poised for a recovery in EV deliveries, as new models take off. But after the chip crisis, battery supplies could be an even bigger headache for EV stocks at large, though NIO's plans to get into the battery business could offer some insulation. NIO stock eyes a long road to recovery after a pummeling. The promising and high-growth EV stock continues to work on a new 24.44 buy point, but it so far remains far below the entry. Bottom line, NIO stock is not a buy right now. However, it could be soon, so check back for updates.
Thanks for watching Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.